Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy turnaround Tuesday to you. Am I supposed to say that? The question is which way is it going to turn? Because I'm like, are we going to turn higher because we were lower at the end of the day yesterday, or is it that move from the highs yesterday down to the bottom did what I don't know. It's going to be hard. What we did see just a little while ago is we saw some dollar strength come into the market, but the euro managed to hold its lows and it continues to build that downside, but we haven't broke yet. So just keep that in mind. Matter of fact, we might as well, we're gonna start working through the charts anyway. The euro, or actually let's go back to the dollar index. So here's your bullish wedge, right? So what that did just now, oops, grab the wrong thing. Let's grab the blue trend line here, right there. Let's match that up at the top. And you can see how perfectly well we are stopping right at the, we're actually going to write down the number, which I tend not to do that, but 94.51. You guys know I like to look at it as support and resistance is not an exact science, but in this case, I mean, we're really struggling with that 51, not just 50, but 51. So I'll write it down. That means support is this trend line, but more importantly, right here at 94. I mean, that's got to hold. But right now, we could say 94, 94.17. Sorry, I got something in my eye. Excuse me. And when I have something in my eye, if you say eyeball, it's correct but incorrect. So okay, let's go to the euro. So here's the euro, and now the euro might be developing a like the dollar index, a wedge as well, any which way you want to slice it, something that looks like along the lines of that, right? Which means that $115.20, $115.30, but what's really important is 115, right? So I mean, we have to just imagine that 115 is important, but we could since that wedge continues to hold at the top on the dollar index, then we just need to mark up that low there. All right, resistance right now is 116.50, but intraday I would say even any move up to 116 would be a problem. So okay. Now, hold on. Sterling, same thing, right? 136, 136.65 support, 135.20, then 134. So today, probably just need to worry about the 135.20 and 136.65. Oh, and this is bearish. This is bearish. Now, let's talk about the Aussie, and let's expand on the conversation that we had on the FACE webinar. So on the FACE webinar, we were talking about the Aussie dollar and how, everybody's really bullish, the Aussie. Everybody I've seen references the inverted head and shoulder pattern of the Aussie, right? So with the inverted head and shoulder pattern here on the Aussie dollar, it would target and we would push, which is doable. Okay. It'd be a retest of this 74.80. Okay. Which, like I said, it's very doable at this stage. Especially with equities holding up. But like I said, everybody's bullish. So if everybody's bullish, I get a little bit worried. Oh, never mind. I don't want to say anything. I don't want to say that. I'm not going to say it. Resistance 74.12 is the 78% retracement, and also highs from right here. I think we stop ahead of that at 74, or I'm sorry, that's 74.12. But I'm going to write the 78% retracement there. So I'm writing that. I think we're in a range, but we could get stopped just about 10 pips shy of that at the round number. Do you know how the market acts around the round number, though? We get around a round number, especially the 74-cent level. You might have some stops pushed right above that. So that's why we could just challenge the 78% retracement, find that more as significant resistance. Okay, here's the Kiwi. So the Kiwi trying to break out. It's trying, but I guess unsuccessfully. So resistance is still 69. I don't know if we've been writing. Oops, what happened here? 74. Oh, it's there. 74.10. I must have typed something else. Hold on really quick. I'm sorry. Let's go back to the Aussie. So support would be right here. I completely ignored support. 73. I know yesterday we wrote 72.90. It's probably the number we still need to write down, actually, because we could challenge this, but really it's here. It's going to be significant. 72.90. Sorry. So with the Kiwi, it is 69.90 or 69.85, whatever we've been writing down, but it's right there, right here, this whole resistance. Support, 69 cents now. Because I bet you yesterday we wrote 68. $80. We wrote down that number, but this trend line probably will support. Okay, continuing on. Dollar CAD. So the dollar CAD continues to trade heavy. We have to get back above 125 in order for this to squeeze. What's really interesting about the dollar Canadian is we're in between fib levels too. That means this support may give way. If we break through 124.25, the next support is 123.70, and that I have to write down. Okay. So 123.75, because it's in between those two fib levels down there. 124.25. Whoops, I just typed that in correctly. 24.25 is intraday support. Again, you guys are like, well, is this bear? People have been looking at this as a head and shoulder pattern. Actually, I was talking to Mark Chandler yesterday, and he's looking at this as a head and shoulder pattern. Not me. When I say that is shoulder, head, shoulder, right? So shoot, let me delete that. I mean, maybe it is. I mean, if that is truly playing out, then we can play back down to here. I mean, I guess it's doable. It's, you know, not impossible, especially if you've seen what's happened with the Canadian yen. I mean, that's, you know, like completely doable, actually, I guess, in the grand scheme of things. Okay. So, but I still think we're range bound. I mean, personally, I guess I should say that. I'm not convinced that the dollar Canadian is completely bearish. By the way, we were all chatting in the chat room about a big expiration in the dollar Canadian at 125 today. If you guys don't know where to find that here, because Philo was in the chat room and said, hey, I guess there's a big options expiration there. And if you're looking at the ForexAnalytix app or a platform, see where it says orders and options. Now, this isn't going to be in the app, like your mobile app, because we have, you know, with Ryan and the team over at Forex Live, we didn't incorporate this previous to the app build, so it's not in there. But if you look at right here, 17 hours ago, here's the expirations and the size, right? So if you look at this 125, 1.15 billion, that's you know, that's a pretty big expiration for the Canadian that happens today, right? So what that means is that, you know, we might get some, so at the 10 o'clock cut Eastern time, which is 30 minutes from now, we might get a little, you know, drift up towards the 125 level. So, but maybe that was the push there earlier today too, you know, that caused that move. So just some food for thought. Okay, continuing on. Dollar Canadian. So we got support resistance today. Let's figure out where that's at. I mean, resistance is, we could say all the way back up at 26, but I'd venture to guess that resistance is probably closer to the underside of that trend line. But I'd say right about there, because you can see spike hourly low, spike low here. That's all going to come in around 125.40. Yeah, we shouldn't see above that today, I don't think, unless crude oil really came under pressure. You know, for some reason, I don't think we should. Okay. Dollar Swiss, same. Look at that trend line support just holding. Oh, what did we write down yesterday? $92.30. So we were writing this number. Now we have to write 92.50. Shoot. Resistance. $93.41. Market's open, by the way. 93.40. Yeah, Norway's trading a little heavier today. Or the US dollar, Norway's actually trading stronger. Dollar in Norway is trading a little weaker, but still, this is really key support. We could, I mean, you know, if this megaphone pattern wants to play out, we could make it to 845 theoretically. So I still think 851 is going to be pretty key support. And resistance is 880. 865. Sorry, it's that level right here. By the way, did you see the US dollar CNH big bounce off of that that support 2 days ago, but still in that diamond pattern? Dollar MEX, what a big test of the 2088 level, but I'm going to write down 2090 as being resistance now because that was the overnight high. And this is bullish. Oops. And this is bullish too. Support looks like, if you know what, let's get rid of this. Any move down to 2070 should find buyers now. Okay. Dollar yen. Oh, by the way, I'm going to take you to the Euro Max really quick, just in case you're not looking. You want to see the Mexican peso and how strong it is? Remember, this is the probably the ultimate volatility, FX volatility indicator right here is the Euro Max. I was long this last week and I didn't stick with it, but I mean, it's a very expensive carry, but look at that 200-day moving average. See how we're probing up against it. I mean, you know, we're now above those previous peaks in August. I mean, this is, you know, it's a pretty big breakout trying to brew here. So just keep that in mind. All right. All right. Sorry. Let's continue on. Dollar yen. This dollar yen out of control strong. 161% extension. We're at it right now. We could, I mean, that's a 261% extension of that move. Hold on really fast. Let me try one last thing. Yeah, we're above there. So I'm just looking at some horizontal resistance levels that coincide with these fibs. So just bear with me. That's December spike high, but I don't know. I wouldn't try to press that. I would think that the next resistance is 114.25. I know some of you that are, you know, looking at that right now, you're like, wow. I mean, that's a pretty massive break, you know what I mean? It is. Any which way you slice it, big breakout. It's hard to chase, but on the flip side is I mean, this, look at this. Actually, let's go over to a weekly. I mean, that's a weekly chart, right? I mean, can we theoretically get back to 117, 118? Yeah, I mean, still just be range bound, right? So it's possible. Anyway, let's figure out where intraday support is. So intraday support would be that hourly support right there. It comes in at 113. It's the lows basically today. S&P. That is significant. 43, let's just call it 43.30. Resistance is probably, well, 44.20, right? It's 44, 44.25, 43, what did I say? 43.30. I still think it's bearish because we came out of that big ascending wedge. Gold. $17.80, $17.20, still bearish. You know what? Hold on really quick. I know gold's not acting well. There's gold, daily charts, right? There's silver. I'm gonna flip them to range bound right now. Now, I think we have to keep them with a bearish bias. Actually, you know what? I'm gonna put silver on. Shoot, I don't know. You know, we've been bearish. They just haven't gone anywhere, right? So, I mean, and if you're thinking right now, which you should be thinking, well, what's changing today between today and yesterday? Like, why are you feeling that today you need to flip it back over to neutral versus, from bearish to neutral? And really the answer is that we're just not going anywhere. I have a more bearish outlook at the moment, but the fact of the matter is this is a daily chart. We're not moving anywhere. Right. So I think we should have a bearish bias, but I think this is, you know, like we should have a bearish bias like overall, but really not, you know, we're just not moving anywhere. So I think putting it neutral for now. And really if silver and gold, I mean, like gold needs to break the 1680. That's a big deal, right? Silver needs to break the, you know, get a good significant daily close again back below 2170, but I'm not convinced right now. Okay. 59,000 is the channel resistance for the Bitcoin market. And then 51,000 is that spike low. So let's write those down. 51K. Okay. All right, guys, that's it. Oh, and Bitcoin is range, silver, gold. Yeah, we're just gonna leave them. We're gonna leave them like that. All right, so there you go. Steve, Stelios, are you guys here?
Please leave a message after the beep. Beep.
All right, we've got Stelios here, but I don't see Steve.
Oh, is he caught up in the school run thing again? I don't know, but hold on. Let me just very quickly upload the files.
Yeah, sure. I'll stick with you for a little bit.
No worries, no worries. I can take over and speak for a little bit. There's no problem.
Yeah. I mean, you know, when's the last time we saw Stelios's charts? You're no slacker when it comes to chart. I mean, you
the
always
problem
say,
is,
like, you know, I don't look at the charts all that often, but you know, you're a good technician.
The problem is they don't change that much recently because we're not getting the, you know, any major moves yet. But because, you know, I look at daily and weekly charts. But anyway, it's okay.
You know what we should do though is we should expand on that conversation about, you know, rates. I mean, you know, rates are really flirting. You know, here's like the 10-year, and you got the screenshot, right?
Yes, I got it. I've posted it already. Yeah.
Okay, great. Thank you. So like, you know, here's a 10-year. I mean, that's, you know.
Yeah, it's flirting, but it
is flirting.
It's not there yet. And, you know, but it's very close to making new lows. yield-wise, I've been looking at it for a while. I think the recent highs, which was what March of this year was 177, 176, something like that. That will be for me. That will make me kind of change my views regarding risk, regarding equities, regarding everything. But at the
So
moment,
we got to break.
Yeah.
We have to break these highs from back in April,
Yes.
March, April.
That's what I think. Yeah.
Okay.
Because if you zoom out a little bit, if you go to a weekly chart or something, it's still noise what we're going through now. So relatively, but yeah, yields are going to become an issue, and with prices rising everywhere, or goods and services everywhere just going up, you're seeing it. There's going to be shortages. I have a friend who works in Belgium. He works for a company. They make chemicals, and they basically make stuff that's used for detergents and things like that. And he's saying to me, you have to start stocking up on detergents and things like that, because there's going to be huge shortages. And I'm sure it's not just that sector. It's a lot of sectors there's going to be problems. And I fear for my UK-based friends, because they have an extra hurdle, which is the fact that they're out of the European Union now, and apparently it's going to be worse there. But I hope I'm wrong. But the problem is prices are going up, and as long as this kind of inflation is still here, and people, we argue, oh my God, this is not the usual type of inflation. This is not demand-based inflation. It's because of supply chains. Well, actually, every kind of inflation is demand-based inflation, because there's more demand than supply, right? But clearly, the cause for it is not because everything is rosy and everybody wants to buy stuff. But as long as this persists, and unfortunately, I think it will persist.
It is a good excuse. It is a good excuse, Elio. I'm not saying that there hasn't been disruptions in some supply chains, right? But irrespective of that, and added to that, whenever you have too much money bidding the same products, you will always have a supply shortage.
Absolutely.
Right? Yeah. I mean, let's assume that tomorrow you debit all bank accounts with 1 million euros, right?
You credit.
You credit, with $1 million, let's say, right? A very extreme example. Do you think you will be able to find a week later a Lamborghini to buy out there?
You're right. But this is
not a single one.
It's a different scenario. I was speaking, Blake, by the way, if you want, you can go and we'll take over now that Steve's here. But I was speaking to my
thank God. I'm so sorry. Get me out of here. No, hey Steve, welcome back. No, I'm sorry. I was just actually opening my we're at that. We can actually open our windows now for the first time in like 5 months. So
that's nice.
Oh, it's nice.
I was going to say, I was speaking to my ship owner friends this morning who go to the gym together, and they were saying, look, our ships are moving, they're going to the ports, but you have certain ports which there are 70 ships waiting to unload. The problem is not with the ships themselves, it's with the supply chain further out from there, and that is very difficult. It's not difficult, but it takes time for that to normalize.
People can't unload them, and it's the same way in the US. There's a bunch of ships just sitting out like at sea right now, just sitting out there. Anyway, hey guys, I am gonna step away. Steve, charts are yours. Thanks guys and gals for being here, and enjoy the analysis with Steve and Stelios. Thanks everyone.
Thank you.
So
it's a difficult situation. It's going to get resolved eventually, obviously it always does, but until then there's going to be higher prices, there's going to be inflation. So we go back to the same question: what do central banks do with the yields going higher?
They pretend that everything is okay.
Yeah, they could do that. They could say it's transitory, and transitory means 2 years. They could do that.
Exactly.
They could easily do that. Actually,
depends on the time frame you choose. Everything is transitory.
Everything,
right?
Us humans, we're transitory. We're here, then we're not here. Anyway, but the markets are still not sure what to do with the situation. Equities were higher earlier today. Now they're going back to unchanged and slightly lower. It's, there's no clear direction yet. And yields, yes, they're going a little bit higher, but I still think if we don't, as long as we don't break the March highs, I personally don't think anything has changed materially. So, and I'm unfortunately, because really I want things to start going and to get some proper two-way action and some trends, some nice trends. We haven't had trends in ages. So apart from the grind in equities for the past 12 years.
Yep. In any case, having to do with trends, I can start by saying what I've been saying for the past few days. Yesterday's move lower in equities technically didn't change absolutely anything. In my opinion, there is still a higher chance that this orderly pullback is corrective in nature. And there's a good chance that we're going to resume higher. Now, if that proves to be the case, that's going to be a major headwind for the dollar. Now, due to the euro mainly, the DXY does look like it's making an effort, an attempt to break through this 94.50 area. But as I've said before, it's an area 94.50 to 95, like it's a strong resistance area. But it does look like the dollar temporarily wants to push higher. Now, as I said, if equities keep moving higher, that's going to be a major headwind for the dollar, and I don't see its path higher being an easy one. Of course, everything changes if equities prove that this is just the beginning of something bigger, which, as I said, in my opinion, is the lower probability scenario, not the higher probability scenario. Now, having to do with the rest, we clearly see crude oil remaining very well bid. And once again, as long as equities are well bid, that's a positive for crude oil prices, right? Crude oil has now reached, is consolidating around the 127% extension for the second consecutive day. I know that yesterday's close was not a very positive one. Yes, we did close positive on the day, but we closed, some distance away from the daily highs. But I don't think that, objectively changes much. Now, natural gas remains under pressure, and it made an attempt earlier today, and it's retraced a little bit to break through this channel. So it's about time we find out if natural gas wants to have a deeper corrective move lower, or it's going to more or less find support and resume higher from here. Clearly, gold and silver are still just, coiling. Right. I know we've talked about the possibility of inverse and shoulders formations, speaking about lower time frames, etc. But in my opinion, and the time frames I'm looking at, all this is noise, right? I'm looking at these descending channels, both in gold and silver. There's not much to do here. No real reason to be bullish as long as we trade below 1800. In the case of gold, and in the case of silver, the equivalent level would now be roughly at 2330, since this is a descending channel, and both the trend line resistance and the 200 daily moving average, which, if you notice, has literally hugged this trend line resistance. Both of them currently pass from 2330. So 2330 is the level for silver, and a little bit below 1800 is now the level for gold. Until we get a break higher from there, the path of least resistance remains lower. Now, I don't think that's going to be the case for much longer, but for the time being, technically speaking, that's what we have. Now, I talked yesterday about copper and it testing resistance. It pulled back from resistance to close the day, but guess what? Once again, we're pushing the resistance trend line here. Let's see if for the second consecutive day we can get rejected from the same area. But in any case, it looks to me like copper, it's a matter of time for copper to actually break higher, right? So if you want to be short, this is a great level to do so because you have an amazing risk-reward ratio. But, keep in mind that there is a big chance that copper within the week is going to be breaking higher. And if it does, I don't think you should be in the wrong side of the market, because we've already spent a decent amount of time consolidating. And once we get a confirmation that the next move higher has begun, it is very likely that we're going to see an accelerated move, and then you really don't want to be positioned in the opposite way, in my opinion. Now, we've also mentioned about the breakout in platinum, which still stands. Here it is. Palladium has had a nice move. You remember I mentioned 2200 being resistance area. This is actually the level we tested yesterday almost, and now we're pulling back. I'm a lot less positive for the time being in palladium than in platinum, so keep that in mind. I'm very skeptical about palladium still. Platinum starts looking very, very nice to me. Now, I told you yesterday that in my opinion, you shouldn't be trying to fade the yen and the USD yen, and USD yen is, on its merry way higher. We've now been trading to, let me extend this. We've now been trading to, what is it? November 2018 highs, right? And this tells you all you need to know. When a market is really pushing 2-year highs, that's usually not a sign that you want to fade this, right? This is usually a sign that this is the direction of the trend. So keep that in mind. Now, the next important area of resistance, in my opinion, is at 114.40. And I don't really see any major resistance area before that. And I do think that from this point on, this 112, 111, 90 area should be support, right? So I think this is a real move, and I think you shouldn't be trying to fade it, and hence everything else that goes with it. Right? We talked about it yesterday as well. Aussie yen, Kiwi yen. Look at everything breaking high, right? CAD yen, pound yen, euro yen. Although clearly, as you see, the commodity currencies are overperforming at the moment. And this brings us to another thing I wanted to mention today, which is the, some of the crosses, right? I've said many, many times that I thought this rebound higher in the Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. And if you want to put in the mix some more like the Euro CAD, Pound CAD, Euro NOK, Pound NOK, I've said many times that the nature of the move higher is clearly corrective, and I was expecting an eventual break lower to continue the downtrend. In my opinion, there is a huge chance that this has already happened in the case of the Euro Aussie. We are at the precipice of doing the same in the case of the Euro Kiwi, right? Hasn't broken down yet, but we're just a few pips away from this trend line support. Now, if we switch the Pound Aussie, you'll notice that we're getting closer and closer to the trend line support here also, right? Around 200 pips. But keep in mind that 200 pips for these markets, if they start moving, can easily be a one-day move, easily. Keep in mind the 200 daily moving average also confluences with this ascending channel trend line support and the 50% fib, right? So at around 183, we have a triple confluence of supports. So keep that in mind. Very, very powerful, if you ask me. Here's the Pound Kiwi, right? So in my opinion, we're getting closer and closer to a possible breakdown in those. Now, what's going to accelerate these moves to the downside? We've talked about it multiple times in the past. A risk on environment will, right? Because we know that there is a generally very good inverse correlation between commodity currencies. A positive correlation between commodity currencies and risk, right? And since commodity currencies in this case are, the denominator, the better they do against the euro and the pound, so the better the bigger the risk on mood is, the worse these crosses should do, right? So if indeed we're just consolidating and getting ready to break higher, then you should definitely expect these to accelerate to the downside. And also keep in mind that in this case, you have a little bit of a positive carry in your favor, which is never a bad thing to have, right? Especially specifically if you're not a day trader, right? So if you're like a person that wants to hold positions for a few days, even a few weeks, this is something extra in your benefit in this case, if you want to be positioned like that. Let me see, was there anything else? Or let me remember if I had anything else to mention. I think that was more or less it. So, Stelio, since I came in late because I was on a call, do we have any questions?
I actually don't see any.
Okay.
I did join about 15 minutes late though.
Okay, that's not a problem.
Laura is asking about URA, which we have.
Yes, absolutely, URA. And if anybody else wants to ask anything else, this is your opportunity to type it in. So URA, let's see, a little bit of a choppy price action here. Right. I don't think URA is out of the woods yet, right? So I don't think it's necessarily the case that we've found a low here. There is still a chance that we got a rather impulsive move lower. Let me delete all this so we can redraw without having too much noise. So we saw a rather impulsive move lower. Now there is a chance that we are creating some kind of a little consolidation here, which keeps open the possibility of one more move lower before higher, right? I do think that URA is going to be moving higher substantially. I'm just not sure if it's going to happen from here. I think there is a good chance that it can happen from a little bit lower. So yeah, that's what I think about URA. Seems to be acting very, very nicely today, although it's still early on the day. But as I said, still there is a good possibility that we can see one more low before higher. So keep that in mind. I mean, if you've exited your position for a reason and you're looking to get back in the market, I wouldn't go full position here. You might want to gain some exposure again, but my confidence wouldn't be that high to go all in here. Now we see another move to the downside. I think it's going to produce a much better buying opportunity. But with very strong markets like this, sometimes pullbacks are weirdly contained, right? Sometimes they start very violently, and then the market seems to be stabilizing immediately without any much more downside and moving to the upside. In very, very strong markets, you can see that type of behavior. Thanks, Steve. Our pleasure, mate. Do you think DXY will break the high today? I don't think it's unlikely, but on the other hand, as I said, as long as the risk-on sentiment seems to be buoyant, keep in mind that there is a big headwind for the dollar, right? A big headwind for the dollar. So would I be buying the dollar? Nah, I wouldn't. I think the dollar can fail very, very soon, right? So I would be very, very skeptical with gaining long dollar exposure. Now, having to do with the question about the Dow Jones, US 30, which is the Dow Jones. Here's the Dow Jones, a little bit of a different type of formation than we've had in S&P and the NASDAQ. If you notice, we have S&P, descending channel, NASDAQ, something like an expanding triangle, right? But a very, very similar type of pattern with the S&P. And then we have the IWM, which is a very, very different thing. Why? Because it has created a symmetrical triangle that now dates back more than 6 months, right? So in essence, the Russell topped out a lot earlier and has been consolidating since. Now, the behavior is different, but there is a common theme, and the common theme is that when you see patterns like this after a very strong move higher, there is still a very good reason to be biased in the direction of the prior trend, which means that this might be a much longer corrective type of pattern than the one we're seeing in the S&P and the Nasdaq. But on the other hand, I think that what they share is that in both cases, we have a much higher chance of an eventual break higher. And now Dow Jones is somewhere in between. It seems to be creating a symmetrical triangle as well that is a lot more recent than the one in the IWM, right? So, as long as we keep consolidating here, I think that the path of least resistance remains higher, and that the chances of eventually breaking to the upside are a lot higher than actually eventually breaking to the downside. Now, you can notice also that the 200 daily moving average has approached this, has almost converged with this triangle trend line support, which means that roughly this 33,500 area is a very significant area of support. So to put it plainly, I think that as long as we trade above 33,500, you have absolutely no reason to want to be bearish. Anything else? AMD, absolutely.
I think somebody asked for 30-year US as well. Oh, US 30. Yeah.
US 30 is
sorry, US 30 is the Dow. Yeah, sorry. I thought it was a 30-year, but then I saw the ticker. Yeah.
So let's see what we have here at AMD. First of all, as you see, that was my old drawing, which I stand by it. Right. I do believe that what AMD is doing here is it's creating another nice bullish type of consolidation pattern, right? We haven't created a higher high yet, so I'm a little bit conservative in declaring this a breakout because this trend line might prove to be a little bit different. But my general thesis that this is a bullish consolidation hasn't changed, and I think that as long as we trade above like 98, 99, you have no reason to want to be bearish, no reason whatsoever. I think that the chances of an acceleration higher and a new high are, substantial. So I think this is a stock that remains a buy on dips and very well bid and in a clear uptrend. Right. So I have nothing bad to say about AMD. Fundamentally speaking as well, I have nothing to say about AMD. I mean, the only argument somebody can have against it would be valuations, but valuations are relative, right? So even in relative terms, valuation of AMD is logical also. So, since the argument about valuations doesn't really matter because you can't take it in isolation. Every equity, every stock trades in a market with other stocks, and it's all about relative value, right, and relative performance. So I don't have anything bad to say about AMD. I think it's still a stock that is worth owning for somebody that wants to have a portfolio of stocks. Anything else? Gas and GDX. Sure. I already covered gas, actually. One of the first things I talked about. Still monitoring this ascending channel trend line support. This is going to tell us if this corrective move wants to run deeper or we're more or less about to bottom out here. So today might be an important day for natural gas. Now having to do with GDX, nothing has substantially changed here. I'm still monitoring this descending channel and the 31.5. I think we break through that, and that's a bullish development that can begin another leg higher. Of course, at the same time, for confirmation, if you want to be extra safe, I would want to see a double breakout to feel confident about it, meaning I think it's a better opportunity to buy the GDX once the GDX has broken out from that descending channel, and at the same time gold is breaking out from its descending channel, which isn't that far away, right? I mean, we're like what is it, $32 away, not even less actually, because this has been moving low. Yeah, roughly $32 away from breaking down in breaking higher in gold. And breaking higher, a $32 move is a move that gold can easily have in a single day, right? So I think if you want to, if you want to be extra careful and you want to be extra certain, you can buy the GDX once both have broken above the equivalent trend line resistance. I think then you can be a lot more confident that it's good to own GDX. I've explained before, GDX is extremely undervalued at the moment, meaning the current valuation of GDX in essence discounts a much lower future price of gold. And I think that is a very, very wrong assumption for the market to discount, right? So I think the GDX is extremely mispriced, and I do think the GDX is going to be a very good investment to have, right? I think that the corrective move we've seen has probably already run the vast majority of its course, and we're probably getting very, very close to a breakout, which I think is going to be legit. Okay, so have a wonderful rest of the day, guys and gals, and don't forget to join Blake in 2 hours and 22 minutes. Bye bye.
I like the accuracy. Bye bye, everybody.
Bye, Phil.
Bye.